In this chapter, we'll be discussing about startups and venture capital. So startup is a company that is in the first stage of its operation. It's newly started. Okay. So most startups have just an idea but no money. See, startup doesn't mean it's promoted by say Reliance, a big group like Reliance starts a new company. That is not startup. Startup means a new entrepreneur who doesn't have any background, who's not into any business previously. Okay. So if they start a business, that is known as startup. Okay. So most of the entrepreneurs who do startups have just an idea but no money. See, so people like you, for example, young people, you have a business idea but you don't have money. So the founders, that is the entrepreneurs, they'll have been having an idea and they want to convert it into product or service. And they have the belief that the product will be having good demand. But they don't have funds. So in those cases, normally banks do not fund those startups because it's risky. Okay. Because the promoters don't have experience. The usually young products are not tested in the market. Usually it's a new product. Like promoters don't have any security to offer, collateral security. So banks usually do not fund such startups. So for funding such startups, there is a special class of investors called venture capitalists. So venture capitalists and the funds they provide is known as venture capital. So venture capitalists are professionals, the professional investors who specialize in funding startups. So you might get a doubt. So when banks are not lending, why do they lend? So we'll speak about the advantages shortly. But one term you frequently hear in this context is Silicon Valley. Silicon Valley in California, US is a place that is known very for its strong venture capital environment. A lot of startups, especially in the IT, computers and technology sector, have availed venture capital there. Some of the biggest companies today, especially in the internet space, were once funded by venture capitalists and therefore became very successful, including Amazon, eBay and all this. However, a lot of companies venture capitalists fund will fail. So that is the risk that venture capitalists take. Okay. But even if 1 out of 10 companies click, they'll make huge profit. Okay. It's not normal return. They'll be earning massive return. So how do they earn profit? These venture capitalists earn money like, one, they look for a very strong management team and they look for a unique product design with strong competitive advantage. And they will look at products and services that can have a large potential market. And they'll be owning a large percentage of the company so that they can influence its direction. This is something which banks don't do. When banks fund a company, they just give money and get back their installments and interest. That's it. They're not into the management of the company. Venture capitalists are different. They actually own a percentage, a very large percentage of the company shareholding, and so they can influence its direction. Okay, so in that way they get back money. So even a lot of companies which they fund also fail. Maybe 90% fail, but even if one company clicks big time, they're earning a lot of profit. So that's the business logic of venture capitalists. One term you may hear in this context is crowdfunding. Crowdfunding allows people who believe in a startup to contribute money via a crowdfunding platform. So ordinary people like you and me can contribute money for an idea which we believe will be successful, and if it clicks, we will earn returns. So government has a scheme in this regard known as Startup India. So Startup India, we've already discussed that banks will not usually fund startups because of the great risk. So Startup India is an initiative by the government with intention to build a strong ecosystem for nurturing innovation startups in the company. So it has 3 pillars: simplification and handholding, funding support, and incentives and industry academia partnership. So for eligibility, an entity will be considered a startup for up to 7 years. Biotechnology startups will be considered up to 10 years. Okay. And they'll be getting income tax exemption for 3 years in a block of 5 years if they're incorporated between say 2016 April and March 19. And new incubation centers will be established across the country. So those incubators will provide the necessary infrastructure and assistance in the early stages of growth. So here we're providing some features of the scheme, Startup India scheme. You can go through it. That's not very much required for interviews, but just for information. The questions that you need to be prepared for interviews are: what is meant by startup? Why do banks usually do not fund startups? Who are venture capitalists? What factors do venture capitalists consider while investing in startups? What is crowdfunding? What is Startup India scheme? And for how many years do startups get income tax exemption under Startup India scheme? So they get income tax exemption up to for 3 years.